Hi everyone, I'm AMAC, founder of AMAC Success Blog, and I would just like to thank you for taking the time to even watch this video. And I say this is a success video because I've never seen someone that was successful or prosperous that didn't take the time to understand the environment in which they operated. So hopefully by the time you're done watching this video, it'll give you some food for thought and help you to understand your environment or see your environment just a little bit differently. So without further ado, gas prices. I mean, I know by now everybody has seen the way gas prices have just crashed over the past few months. I haven't seen gas prices like this since at least 2005. You're telling me that I can get a tank of gas for under $30? I mean, it feels like I stole something. And you know, it's really amazing. But the question is, are these low gas prices really such a good thing? I mean, is everybody happy about this new trend? Well, every time that I've seen something that was just too good to be true, it usually is. And with gas prices could very well be the same. However, in this circumstance, it's a little bit more complicated than that. You know, in this circumstance, there are winners and there are actually losers. And in this video, I'll actually explain my considerations for this subject, and I'll offer my opinion on the matter as well. So first, let's take a minute to look at some of the relationships between oil, the stock market, and even gold, and how they relate to one another. In a minute, I'll pull up a 1-year chart of each stock using my stock trading software, Thinkorswim, and describe how one affects the other. So don't worry if you don't understand all the nitty-gritty details. You know, hopefully at the end I'll wrap things up and it'll give you a better understanding. Just pay attention to some of the main themes that I'm talking about. Well, enjoy! Okay, so right now I am in Thinkorswim and I am going to go ahead and look at a chart of US oil, the US oil ETF or USO. So I'm looking at this and it's a really interesting chart because you can see oil pretty much, you know, staying the same, trading in this range, and all of a sudden just falls off a cliff. I mean, and even when you look at let's say a 5-year chart, sure. So you can see how it's trading in this huge range, right? The cycle has really never really gone anywhere. All of a sudden, it just falls. When you look at a 10-year chart, you can see the same thing. But the interesting thing about it is that the last time you see this huge drop was around 2008. And this is where that kind of makes me nervous. It could be something short term. It's crashed through this resistance right here. And now it's kind of dragging down the stock market overall. So we'll see if this is just a short-term pullback, but it may be something more. So now that we've looked at oil, I want to take a look at the stock market and see how the stock market is doing during the same time span. So let's look at, let's start with the Standard & Poor's 500 ETF, SPY. And these ETFs normally follow their major indexes. So this is the Standard & Poor's 500 ETF. We'll also look at the NASDAQ and the Dow Jones ETFs as well. So we see that the stock market has actually done pretty well for itself. You know, since the crash back in 2008, recovered, and it's been on an uptrend ever since. But lately we've seen a little bit of a resistance, and let me look a little bit closer to give you a better picture of how it's done in the past year. You know, we've seen it gone up, up, up. It hits this little dip, but recovers. And then all of a sudden, it starts hitting resistance right here. It's kind of gone sideways. It's stuck in this channel between about 200 or 200 and maybe 208 around there. So it's been kind of sideways. We'll see the same thing with the Dow Jones ETF. The same thing kind of goes sideways, and with the Nasdaq. But basically the market has gone sideways. And we could see with gold, actually, which is interesting. Usually what happens is when the stock market does well, gold does not do well, and vice versa. So we're seeing that, gold has kind of been sideways, and then it starts to go down. And all of a sudden, around the same time that the stock market has gone sideways, gold has actually picked up, and really so much lately, which kind of has me nervous a little bit about the stock market, because usually investors use gold as a hedge. When the stocks are doing bad, they invest in gold, and gold shoots through the roof. So this is kind of what we're seeing. If we see the stock market really drop, we're going to see gold shoot through the roof. And another thing I want you to pay attention to is this pink line right here. This pink line represents the 200-day moving average, which is usually a pretty good area of resistance or support for any stock or ETF. So you'll see that stocks and ETFs, they have a really hard time rising above or dropping below this 200-day moving average. And you'll see this with gold. It's popped up above the 200-day moving average and then kind of dropped down, up again, down again. So it really has trouble around this area. And we'll see. Time will only tell if the stock market does poorly. We'll probably see the gold rise above this 200-day moving average for an extended period of time. So that's kind of a good look of oil, as well as the stock market and gold, and how they're doing at this current time. All right, so the recap. Gold is shooting up through the roof due to the lack of investor confidence in the stock market. And oil, which is a huge component of the stock market, is way down. And this may have either a short-term or long-term effect on the economy. To further illustrate my point, let's take a look at some of the big winners and losers of falling gas prices. Alright, some of the winners consist of, number one, consumers, retail and travel industries, and automakers. You gotta figure, anyone who's willing to spend money on gas, and anyone who consumers are willing to cough up their cash to, probably win in this situation. Alright, so the losers. Number one, the energy sector. Two, the basic materials sector. And number three, automakers. Well, when the energy sector loses, of course, anyone who depends on the expansion, of oil companies or the expansion of infrastructure, they are going to lose a lot of business. And then automakers, even though they're winning because their gas powered vehicles are making more money, it's probably at the expense of their electric cars. So people like Tesla, Chevy, Nissan, BMW, they're all going to have their work cut out for them if they're into the market and gas prices are lower. So we've taken a look into the economy and taken into account some of the pros and cons of falling gas prices. So what do I think? Actually, I think two things. In the short term, gas prices won't really hurt the economy too much. In fact, I'm willing to bet that it's going to help more than it'll hurt. However, and this is a big however, if the gas prices stay in the same area for too long, gas prices will act like a weight that will actually drag down the economy. So, once again, I'm AMAC, and I really hope this helped you to understand your world just a little bit differently and helped you be a little bit more successful in everything that you do. So be blessed and be pressed to achieve success. Thank you.